welcome to today's video. Thanks for joining me, whether you're joining me live or catching this at a later time. I appreciate you checking in. Today I want to talk about new construction. And I came across an interesting article in the Wall Street Journal titled, "This Old House, Home Buyers' Best Deals Are on Builders' Lots." And this is what the article looks like. You can catch it in the Wall Street Journal. I will also put a link to the article below, but it may or may not be behind a firewall depending on how many articles you pulled up from the Wall Street Journal. But the article had a bunch of really interesting information in, and I thought I'd share it because it's a shifting dynamics, in the real estate world. And here's what's happening. It's now actually more economical to buy a new house than an existing house. And that is not historically the case. Usually, a new house costs considerably more, on average 16% more than an existing house, but those higher upfront costs are offset by a lower cost of ownership, fewer repairs, more efficient energy, home warranties, things like that. So over time, they're about the same cost. But, today, year to date in 2024, the premium for a new construction house is only about 3% more than an existing home. And that's the lowest it's been since 1968, based on data from UBS housing analyst John Lavolo. Sorry, John, if I mispronounced your name. So it's only 3% more, and that's really, really interesting. Now, there's a few reasons why new construction homes are starting to become more affordable. First, they're smaller than they were in the past. On average, a new construction home is 6% smaller than it was in just 2021. The average square foot in 2021 was 2,384 square feet, and so it's smaller than that. And then there's fewer options and less upgrades, all in the hopes of trying to make the house more affordable. Now, the interesting thing, there's several interesting things. Typically, builders start to kind of twitch when they build up excess inventory. They don't like standing inventory. There's a couple things they don't like. They don't like standing inventory, and they don't want the whole acquisition, building, selling cycle to be longer than 2 years. But right now, what's the supply of newly built homes in October is 9.5 months. And like I said, historically, if it gets over 4 months, builders quit building. They don't want standing inventory. They don't want a bunch of homes on their balance sheets. They want to sell. But because there's such a shortage of existing homes, and because new construction homes are so popular, they're getting comfortable carrying more inventory, which I find really, really, really interesting. Now, here's a couple other things. This is something else. So typically, when a house reaches about 25 years old, it starts to have major components that fail and need to be replaced. There needs to be some serious deferred maintenance and renovation. And this is according to the Federal Reserve Bank of Philadelphia. And so homeowners that own a home that was built between 1970 and 1999, on average, spend 26% more annually on maintenance than on homes built after 2000. And if you have a home that was built pre-1970, then that costs are even higher. But what happened is when during the great financial recession of 2008, 2009, builders quit building and there wasn't a lot of new homes left on the market. And so because of that, the existing age of the average age of existing homes has creeped up to 41 years old versus 32 years old before the Great Recession. In 2008, the average age of the housing stock was 32 years. Today's 41 years. And so today's existing homes come with a lot more costs for renovation, deferred maintenance, and those type of things. Now, undoubtedly, during the pandemic, when there was a wave of cash, there was a rush to try to renovate. So many of these older homes have been renovated and have been modernized, but then again, many haven't. And so what happens, not only is it more expensive to do maintenance and the renovations on an older home, but so is your insurance is more expensive, the cost to heat, because it's less efficient. All those lead to a higher cost of ownership, which is why new homes usually have a premium to price. But today it's really weird. And here's what happened, is that in a healthy housing market, properties tend to lose value as they age, especially if they're not renovated. So they lose value. And this process is known as downward filtering. And this downward filtering actually helps lower income buyers get into property to get on the bottom rung of the ladder. And this historically has worked really well. The aging houses, young buyers buy it. They put in some elbow grease. They do renovations themselves. They build equity, and they move up the property ladder. But when we got to 2013, where everything was upside down, interest rates were near zero. There was interest rates were low, right? And then into the pandemic, where interest rates were zero. That no longer mattered. There was just a shortage of houses and everyone to buy one. And so we didn't take consideration of the age of the house or the condition of the house. We just wanted a house. And so that downward filtering stopped happening. And today it's even worse, because now not only existing homes as expensive as new homes, but interest rates are high. And so affordability is low, and it's putting a lot of pressure on existing homes. Now, all that being said, there's some other advantages to buying a new home versus buying an existing home. With all these homeowners that have these very low interest rates, they're somewhat ambivalent about selling their house. They're a little bit worried about having to buy a new home with a higher interest rate, and they're worried about being able to find a replacement home if they sell their home. So they're not completely committed to selling. Where builders are 100% committed to selling, and they're going to do whatever they have to do to move property, unlike an existing homeowner. And so they'll do discounts and incentives, and they'll do loan buy downs. They're going to do whatever it takes to sell homes, and oftentimes an existing home buyer doesn't make the same choices. So that's it. That's the condition of new construction versus existing. It's been going on all year. Builders are just are moving a lot of property. They account now for unusual share of the sales market right now, and good for them. Without them, we'd have a really distorted housing market. I put a link to the article in the notes below. It's always good to go to my LinkedIn page, because on my LinkedIn page I do a pretty thorough summary of the article, and that will help definitely if you haven't been able to access the article. And I put links to it below. So with that, hope you're having a great day, and I look forward to talking to you again soon. Thanks.